What is the best Forex scalping system? This article will explain the most common Forex scalping systems and highlight their advantages and disadvantages. Before we begin, let's take a quick look at the nature of the Forex market. Basic insight of Forex: in order for the global market to exist, businesses need to be able to convert currencies. The foreign exchange market allows this. However, no currency is equal in terms of their value. Forex trading allows traders to make profits from the differences between currency values, and it is the largest business in the world. Forex helps encourage foreign investment and trade, and the act of Forex trading is regarded as one of the best businesses to earn profit with stability. Forex differs from other financial markets, such as stocks and futures, because it works more or less on a 24/7 basis, but the system remains limited. Traders are free to trade as and when they choose, which creates highly responsive and at times confusing differences in Forex price fluctuations. The basic drivers behind Forex rates include economic news releases, government statements, and political uprisings and inflation. Scalpers: to have a chance of success in scalping, you need to be willing to sit at a computer for a set amount of time so you can pay close attention to market movements and your positions. The process is extremely fast-paced, and scalpers have to be able to make decisions within seconds. Often, they will use either 1, 2 or 5-minute charts. Scalpers also need to be prepared to take losses. For the best chance of success with the best Forex scalping system, a trader must have easy and flexible access to trusted market makers with a flat form of buying and selling currencies. Additionally, having a fast and reliable internet connection is essential for scalping, since in this market big changes can happen in a fraction of a second. Consequently, having a contingency plan is vital. Have the contact details of your dealing desk to hand at all times, should you need to identify yourself. Reasons behind scalping: scalping refers to traders who skim small profits regularly. They will aim to earn small amounts of profit several times in a single session. Scalpers will often base their upcoming trading decisions on recent trading analysis, financial reports and events. In one session, some scalpers can make over a dozen trades. Volume is key. They will open so many trades, with the aim of gaining just a few pips per trade. By being consistent with this process, they can stand to benefit from stable profits with continuity. There are two different methods of scalping: manual and automated. In the manual system, scalpers need to sit in front of a computer so they can observe market movements for the purpose of choosing their positions. On the other hand, with an automated system, a scalper can teach a computer program a specific strategy, so that it will carry out trades on behalf of the trader. Forex scalping strategy: the strategy of making profit to hold currency for a period of time is referred to as the Forex scalping system, and those that follow this system are known as scalpers. They aim to place high volumes of trades, earning small profits off each one. Scalping is a subset of day trading, which covers repeated entry and exit in a trade in order to realize small but multiple gains from intraday movements during the trading session. There are a number of FX scalping systems available. We're going to look at some of the most popular ones below. News feeds: there are certain numbers, when released, which create an irrational market. These include GDP, employment figures and non-farm payment data. Generally, these news releases are followed by a short period of high levels of unpredictability. It is in these periods that some traders will move to make quick gains. These periods of unpredictability will often only last about 15 minutes, when the currency prices will start to revert back to where they were prior to the news release. Inside day breakout. Inside day patterns apply to candlesticks, where today's high and low range is between the increasing and decreasing range of the last day, which denotes reduced volatility or unpredictability. Where there are various inside day formats day by day, it is an indication of subtraction and continuous instability, and that causes a significant increase in the possibility of a gold break. Forex dealers construct plans and patterns based on this concept. Using only inside bars on the day-based chart time frame, many traders trade currency. How to choose the best scalping system. Forex scalping trading system is not something where you can achieve success through luck. Instead, it is a combination of the different features of the Forex market which display profitable trading and influences the most fundamental dynamics of the currency market. Any FX scalping system focuses on exact movements which happen in the currency market. In this matter, the object is to manipulate abrupt changes in market liquidity for fast order execution. Successful scalping is not related to trends, but it is dependent on volatility and unpredictability. However, scalping involves small profits over day trading, frequently reaming off small profits from small price movements in the currency market. Because profits tend to be so small, almost all scalping methods use a bigger than normal leverage choice. As high leverage leads to upward risk, many scalping models use down gearing. Leverage use encompasses high risks, but as scalping methods are reliable in their use of a stop loss, a higher leverage ratio may be acceptable. Using high leverage is particularly risky during news releases or non-farm payroll where wide spreads can occur and the stop loss might not be triggered. To prevent this, it is advisable to use a leverage ratio in a scalping strategy during periods of high unpredictability. The Forex scalping system demands a certain level of mental endurance. To make profits in scalping, the Forex trader must be able to control their excitement and remain calm and composed. Emotional responses to risky activities can cause traders to make bad Forex business decisions. You must also have confidence in your chosen scalping system. Scalping the market is one of the least risky ways to trade Forex. Nonetheless, it is still important to have a solid trading risk strategy. Profitable scalping must understand market conditions and Forex trading risks. Traders always have to keep in mind that they shouldn't trade more than they can afford to lose. Trading beyond your safety limits can only lead to damaging decisions. For the interests of building a fruitful trading method or style, be careful not to take enormous risk. In order to be successful in Forex trading, traders should focus on developing a properly calculated strategy. When starting out in Forex, it is wise to take small steps and gain experience. Gaining profit in Forex mostly relies on market conditions. This currency trading almost wholly depends on how the marketplace is. Accordingly, scalping often denotes difficult trading market conditions, and scalping systems need to fully understand and be able to adapt to the changing nature of the market. For the best Forex scalping systems, traders should first define their goals. Of course, the purpose of entering the market for traders is to gain profit, but when scalping you have to remember that the profits will be low. No matter what style a trader chooses for their trading, they need to make sure it suits them and they feel comfortable with it. A well-thought, disciplined and flexible strategy is the main feature of any successful scalping system. Thanks for watching the video. Share video to see it all. Subscribe to my channel.